Assalamualaikum warahmatullahi wabarakatuh to my lecturer and my fellow friends. Today, I would like to talk about value propositions of Islamic finance. As we know, Islam is more than a religion, and every Muslim is expected to live according to the Islamic code, or we call as Sharia. Islamic finance is a financial system that operates according to the Sharia, and just like conventional financial systems, Islamic finance also features banks, capital markets, fund managers, investment firms, and insurance companies. The main difference between Islamic and conventional finance is the treatment of the risk and how the risk is shared. In conventional terminology, we might think of this as debt, such as bank loans and bond issues respectively, but that is inaccurate. Those categories cannot be applied to pure Islamic finance because interest is prohibited in Islamic finance. For example, if an enterprise is financed by debt, with an obligation to pay interest, the risk of the business is not being shared fairly. Instead, Islamic finance requires that finance is provided on the principle of profit and loss sharing. The first value proposition of Islamic finance is social entrepreneurship. Islamic financial institutions will be tasked with conducting and funding social entrepreneurship initiatives to ensure social accountability for SMEs and lower-income consumers. Islamic finance will be at the forefront of seeking entrepreneurial solutions to pressing social issues in order to reposition itself as a panacea to the economic challenges of modern finance in the global economy. And the next one is global integration. Traditionally, Islamic law does not reject foreign values as long as they do not contradict the fundamentals of Islam. Therefore, in line with this line of thinking and the need to further broaden the Islamic finance industry's consumer base, there is a need for an in-depth analysis of most conventional banking practices and rules with a view to developing better rules that are generally based on Sharia but inspired by conventional practice.
My name is Nur Aida Izzati Pinta Fizi. Next, I will explain to you about the structure and the operational mechanism of finance Islamic system. Okay, so you guys can see up there is an Islamic finance system. All transactions must be governed by norms of Islamic ethic as enunciated by the Sharia, which is the Islamic law. Okay, while entering into commercial transaction is not prohibited, the freedom to contract is proscribed by other norms such as the prohibition of riba and ghara. Okay, in the view of Islam, the system of interest occupies an element of injustice because the owner of the fund required the borrower to pay more by returning principal plus interest regardless their situation. And in contrast, the Islamic principle used by Islamic banks is the system where the borrower and the lender share the risk and benefit with the division according to the agreement, so that there is no injurious party disadvantaged by the other partaker. Okay, so next I will explain to you about the structure of Islamic finance what is the structure of Islamic finance and what is the operational mechanism of Islamic finance system. Okay. Okay, next we look to the structure of Islamic financing first. Okay, which is Islamic banks is based on principle of Islamic law, which is firstly we have financing, and under financing we have four stage, which is profit sharing, second is selling, and third is lease, and lastly we have benevolent structure of conventional financing system, which is the difference between Islamic bank and conventional can be seen from its operational basis, which is conventional banks base its operation. Okay, so what is the principal law? Okay, you can see up there. Firstly is risk sharing, second is materiality, next is no exploitation, and lastly no financing of sinful activity. So there is four of principle of Islamic law. So here, what is the difference between conventional banking and the Islamic finance system? Okay, let's start with the difference between conventional banking and Islamic finance can be summed up as the former is largely about debt base and center of sharing. Okay, in conventional banks, it will borrow money from depositors at a low interest rate and lend them to borrowers at a high interest is forbidden in Islam, and therefore Islamic banks enter into profit sharing arrangement with both depositor and borrowers. So the difference between Islamic financing system and the conventional banking is in Islamic banking we have risk sharing, which is sources of fund. Investor will share their profit sharing investment account, which is PSIA. Holder share the risk and return with bank, which is the return on PSIA is not guaranteed and depends on the bank's performance, which is the users of fund. Islamic bank share the risk in mudarabah and mudarakah contract and conduct sell contracts in most other contracts. So compared to conventional banking, which is they use risk transfer, which is when the sources of fund depositor transfer the risk to the specified return, and use often the borrower are required to pay interest independent of the return on their project, which is conventional bank transfer the risk through securitization or credit default swap, which is financing is debt based. Okay.
Move to the instrument part, which is we choose Bai Bithaman Ajil. Bithaman Ajil is an Islamic financing concept refer to the sales of goods on deferred payment at a fixed price that include profit margin to the seller. This concept is commonly used in property or asset financing. Bai Bithaman Ajil house financing is the popular concept in countries like Malaysia, Indonesia, and Brunei. Customer identify the asset he want to purchase and approach the bank for financing. Under the Bai Bithaman Ajil house financing concept, the bank will purchase the asset at cost and sell the same to the customer at cost plus profit on deferred payment basis at the duration and price agreed by both parties. There's also some difference between Bai Bithaman Ajil and conventional mode. First is profit rate. For the Bai Bithaman Ajil, the profit rate is fixed, which is it's remain the same for the entire cost of financing, while for conventional it is fluctuate by interest rate. Secondly is Bai Bithaman Ajil transaction is free from gara or unreasonable uncertainty, while for conventional mode is there have some uncertainty or gara concept. Last is for Bai Bithaman Ajil. There is no hidden charge or additional charge that will change the price of property purchase, and also no compounding and outstanding penalty charge. While in conventional mode, there have penalty charge and might have some hidden